All right. Hello and welcome to my first video, and a video that a lot of people have been asking me to make, explaining all these columns and just how this market monitor works, like what are all the colors and all that stuff. Okay, so here we go. So I'll just go left from right, or left to right, and yeah. So this column right here, E, is basically the short-term trend of the market. Okay, red is obviously down, yellow is cautionary, green is up. And what changes the colors is, if anybody's familiar with the William O'Neill follow through day market school kind of analysis, that's basically what changes these things. So I instead of looking at their website, I just did it myself here, tracking follow through days, distribution days, stall days, and something I like to track, still trying to figure out what it means, but a VIX day, which is essentially when the market goes up and the VIX goes up as well, which I've always thought was interesting. So yeah, like we got it here on this day here when the market went up and the VIX went up, and of course look what happened later. So anyways, so up top here I calculate the number of distribution days, and that also changes it from green to yellow and yellow to red, etc. All right, so onwards. So right here, I'm basically scanning for the stocks in the different stages. If you know Stan Weinstein or Wyckoff stage analysis, that's what I'm doing here, just scanning for the stocks and where they are. So stage one basically is a stock that's like this, goes like that. Here's a moving average, and it's like right there. Okay, that's what that means. Stage one. Stage two is basically something like this, going sideways for a long time, and it goes much higher. Moving average goes like this. It's like right there. Okay. And stage three is something like this. Our stock's gone like this, and it's starting to go sideways like this. Okay. And it's like right there. Okay, so it goes higher and it's gone sideways. And stage four is basically something that's like this. Okay, right there. Okay, it's super simple. So, here's one. Okay, here's two. Here's three. And here's four. Okay, so 1, 2, 3, and 4. Okay. All right, so that's that. This T2 117 is basically tracking the number of stocks making new highs versus new lows. Higher number means more new highs, lower number means more new lows. This R is the range of the candle, daily candle of the IWV ETF, which is the Russell 3000, which is basically all of these stocks in the market. And so, I look at the range of that. And then also in this column right here, I'm just taking the P&L for the day, whether up or down, of the IWE index. This T2129 and T2104, just as a way to get volume into my spreadsheet. It just tells you if the volume is positive or negative. And then over here, we have X21 and X10. That's where the ETF is relationship of the 21 and the 10 exponential moving averages, whether they are above or below, and currently we're below. Okay. The trend, the 10-day moving trend, and the trend is basically just an indicator which takes up volume versus down volume. So let's say if like more people are hitting the ask, so buying the ask versus selling the bid, it shows here as this ratio, either above 1 or below 1. So below 1 means more people are buying the ask versus selling the bid. So above 1 means they are selling the bid. Okay, PC is the put call ratio, and I'll take all, so not just equities but the ETFs as well. The VIX, of course, which is the fear index. Okay, the 20 bull and 20 bear is basically a scan that looks for stocks that have made a 20% move in 5 days. It's pretty interesting here. This data here. We've gone from 70, stocks with made 20% move in 5 days to now 85. Big reversal. Stocks making 20% moves to the downside in 5 days. Okay, HH and LL. So HH is number of stocks that are making higher highs from yesterday, with $100 million or more dollar volume. So $100 million has gone into the stock during the day or come out of the stock in a day. And then lower low is stocks that are making lower lows from yesterday. Bull combo and bear combo, or bull C and bear C. That's basically just tracking candles that are either finishing at the high or finishing at the low in terms of the ranges. Okay, and then BB45 and BB45D, that's basically just tracking stocks that are above a 45-day Bollinger Band and stocks that are below a 45-day Bollinger Band, which typically is, tells you if things are extended or not. And then over here, the 5% G, or green, or 5% red. This is basically stocks that have moved 5% on the day with $100 million dollar volume or more. Okay, and then STMU and STMD. It's basically the number of stocks that have their 7-day exponential moving average crossing the 21-day moving average. So STMU, that basically means the the 7 has crossed above the 21, and STMD, the 7 has crossed below the 21 over here. And then TD cell. This is a complicated indicator, but essentially it takes today's close and it compares it to the close of 4 days ago. And if it has gone, or if the close today is above the close of 4 days ago, 9 days in a row, it will show up here. And on the flip side, if today's close is lower than the close of 4 days ago, and it's done that 9 days in a row, it will show up here. And it's typically an overbought or oversold kind of indicator here. So moving onwards, this AI is anxiety index. Basically above 20,000 and below 20,000 is what you look for, but below 20,000 and investors are not anxious. Above 20,000 or 30,000, and they're getting more anxious. So this mid is basically taking the stage analysis over here, the percentages, and adding them together. So stage 2 plus stage 1 is the mid of 39%. So if it's bullish or not, 32 plus 7 is 39. And then this long NY and NQ, this is the New York Stock Exchange 200-day moving average of the advanced decline line. Okay, and typically this is just tells you if you're in a bear market or not. If it's below 0, it's a bear market, and if it's above, you're in a bullish market. So we're in a bullish market long term. Okay, so that's a short, version of what this market monitor means that I post on, X or Twitter. So, yeah, if you guys like that, that'd be great. Now that you guys know, yeah, what all this means. Cool. I'll see you later.